Thank you for joining us at XM.com. You're watching today's Daily Market Comment by Mario Sachikiriakos. I'm Christina Marujos. Investors continue to reassess the trajectory of Fed interest rates. Under the hood, there's been a quiet repricing of rate expectations this week, with a probability of a June rate hike edging higher and bets on rate cuts in the remainder of the year getting trimmed somewhat. A strong batch of U.S. economic releases yesterday put a June rate increase firmly on the map, as underlying measures of retail sales exceeded forecasts alongside industrial production and home builder sentiment. Similarly, there's been a stream of Fed officials on the wires lately, and the common message is that it's way too early to even discuss rate cuts. In the markets, the unwind of rate cut bets lifted U.S. Treasury yields, which in turn boosted the U.S. dollar through the interest rate differential channel. The probability of a Fed rate increase in June currently stands near 20%, and if traders start to view it more as a 50-50 coin toss heading into the event, there's a window for the dollar to extend its latest gains. With the dollar and U.S. yields creeping higher, one of the main casualties was gold, which sliced below the $2,000 an ounce region. The correction in gold has scope to continue if the odds of another Fed hike next month keep rising, or rate cut bets cool further, although it's difficult to envision any huge losses either. Over in the equity arena, there's been a flight to quality lately, with investors rotating towards mega-cap tech shares that are seen almost as safe havens in a rocky economic environment. A handful of tech giants are essentially holding up the entire market, which raises red flags about what lies ahead, reinforcing the warning signals from excessively rich valuations. Crossing into Japan, the economy expanded by 1.6% in annualized terms in Q1, far exceeding analyst estimates. And yet, the yen is getting slaughtered on Wednesday. In the political sphere, investors are grappling with conflicting signals around the debt ceiling showdown after House Speaker McCarthy said a deal is possible this week, even though the two sides remain far apart in negotiations. Markets are laser-focused on the risk of default in June, although perhaps the true risk is what happens after a deal is found, as the Treasury floods the system with bond issuance and potentially drains liquidity out of other markets, such as equities. Thank you for watching the Daily Market Comment here at XM.com.